Good morning, everyone. I'm Vince Lancy. This is the GoldFix Market Rundown. Today, we're going to be talking about Germany's trust or waning trust of the U.S. as gold custodian. We have that story, and we'll go through it in a second. It's a relatively new story. Also, today is Liberation Day or Tariff Day, depending on how you look at it, for Donald Trump's plans to be rolled out globally. Before we get into those, let's look at the markets themselves. 10-year yields are 413, continuing lower, down 2. The dollar is 104.10, down 9, but steady. The S&P 500 is 55.86, down 43. Very volatile week. The VIX is 23.31, up 1.5. That's very strong. Gold is 31.119, up 5 and change, middle of the range. If you're interested in what's going on there, gold is being bought out of the gate. Zero Hedge noted that yesterday. Gold is being bought out of the gate in Asian hours, and then the rest of the day manifests as it manifests. Silver 33.74, up a little bit, up 7 cents. Copper 501, up 2. WTI 71.07, stable but down 29 cents. Natural gas 396, up 2 and change. Bitcoin 84 spots 680, down 440. Palladium 986 and change, 980 for platinum. Gold, silver steady at 92, up 4, down 6, and as I just said, steady. Grains are all down uniformly, rather. Soy 1020, down 0.5%. Corn 448, down about 1%, and wheat 543, down 90 basis points. There's a front page. That's a story we just sent out. Gold, Germany's trust of U.S. as custodian is under review. That's a post we put out to founders. That's a preview of two stories that are going to be coming out here, exclusively here. One is extended coverage or filling in the blanks on the Chinese Chinese insurance plan. And the other one is something we're going to start talking about now, and that's German gold in the U.S. And by the way, that HeartNet story, it's not about gold, but it's about the world, and gold is part of the world, and that's really what's going on. Here's the stories we put out yesterday and today. Gold, Germany's trust of U.S. We're talking about that now. GoldFix PM, that's an update on the silver squeeze, all right, and the gold expiration and delivery. 11 billion was taken. That's the bottom line. Founders AM, JPM's desk makes ready for tariff day. Founders U.S. repatriation, we just discussed that. UBS, getting to the actual gold story. Gold ETF demand has turned a corner. UBS reiterates their strength in gold, and they will add to it, I think, after tariff day, if the tariffs actually go in. So they're 3,200 with an eye on 3,500 coming right now. ANZ Bank, China gets proactive on tariff risk. All right, so here we go, the analysis. Germany's trust of U.S. as custodian is under review. The long-standing assumption that Germany's gold reserves are safe in New York is no longer taken for granted. Political shifts in Washington, public calls for increased transparency, and broader concerns about U.S. reserve integrity are prompting parts of Berlin's political establishment to reassess the wisdom of maintaining large-scale gold holdings abroad in general. That graphic there, that's the world's gold holdings. It's a World Gold Council graph there. Germany is the red arrow. China is not really on that scale. They probably have a lot more they're not showing, but that's it. Next, Germany maintains the second largest national gold reserves globally. That graphic just showed you, behind only the United States. Approximately 1,236 metric tons, or 37% of that reserve, are reportedly stored in the vaults of the Federal Reserve Bank of New York. The original rationale, developed during the Cold War and later reinforced during the Euro's formative years, was that such an arrangement allowed Germany rapid access to dollar-denominated liquidity in the event of crisis and gave geographic safety in the event of World War III breaking out. There's Germany's gold locations. 47.9% is in the Bundesbank. A lot of that was repatriated from the U.S. in 2016. The Federal Reserve Bank of New York has 36.6%. Bank of England has a little bit less than 13%. And the Bank of Paris, Bank of France, is a little under 3%, adding up to the total of 3%, 100%. The assumption of everything that was the assumptions that created gold being stored in the U.S. are no longer immune to scrutiny. We have that full story. Gold, Germany's trust of the U.S. as a custodian is under review. Linked at the bottom and in the post. Moving on, today we're going to go right to geopolitics and politics. Today's tariff day is probably the bigger news story. Bloomberg reports, this is this morning, Bloomberg reports that Trump's deliberations over his plans to impose reciprocal tariffs are coming down to the wire, with his team said to be still finalizing the size and scope of the new levies he is slated to unveil on Wednesday afternoon. As a reminder, Peter Navarro said that Trump wants to raise $700 billion annually in tariff revenue. In meetings on Tuesday, Trump's team continued to hash out their options ahead of a Rose Garden event scheduled to begin as U.S. markets close at 4 p.m. on Wednesday. So the official news is probably going to come out at 4 p.m., but there will be leaks and trial balloons that come out before then. The White House has not reached a firm decision on their tariff plan, even though Trump himself said earlier in the week that he had, quote, settled on an approach. Scrolling down a little bit, this is a nice graphic. Zero Hedge has it a premium post. They're live blogging it today. This may come from a bank, I'm not sure. But it gives you an idea of where the tariffs could be. There are plenty of graphics out there. This is one of the better ones. And there's the link to it. The bottom line is markets today will be volatile. And they have been volatile all week. But markets today, if you talk to some banks, the banks that are on top of this are JP Morgan and Goldman Sachs, right? At least the American banks. The foreign banks, they're also on top of it. And they're gaming it out as to how they would react, right? So, but staying at ground zero here, Goldman Sachs thinks that the marketplace is, I think, undervaluing. They think the marketplace is not ready for bad news. How's that? And I think JP Morgan is a little bit less concerned about the immediate news item coming out. Okay, so that's it. It's the story of the day, and that's our coverage of it. Data on deck today, such as it is, factory orders are going off probably in about 10 minutes. In premium, we have a TS Lombard report, which is, again, the European version, the European perspective. And they have, we're not showing, this is a graphic that's basically a replication of the graphic that Hartnett just had out. Basically, this is U.S. tariffs throughout history, and now they're about to jump from a little bit between 2.5% and 3% to between 8% and 10%, roughly, give or take. So that's a pretty big spike, and it has implications. And what this report does is it goes through the implications. Will the tariff be passed through? Will it not? And there's a really nice graphic in there that I think is worth looking at. We break it down as well for different perspectives. Let's go to the actual charts. I want to look at a couple markets today. I want to go through all the markets in preparation for the ramifications or effects of the tariff. This is the 10-year yield 1-hour chart. Okay, these are all 1-hour charts. 10-year yields have been cratering all this week for various reasons. Economic concerns, tariffs as related to economic concerns. But the 10-year yield is telling you that the marketplace is concerned about recession or slowdown. So if you were looking at the market, each market from a perspective of recession, everything is fine, call that soft landing, and stagflation, not inflation, but stagflation. You would say recession to this. Looking at the dollar over the same time period, well, you're looking at the dollar saying we don't know anything yet. So status